Okay, we are noon straight up, and my name is welcome everyone. My name is Patrick Gaskill with Jackson and Whitaker, and we have a very special event today. And on behalf of Jackson and Whitaker, I'd like to welcome all of you. A very exciting topic. We have Bradley Warden joining us with Macquarie Asset Management with their Ivy Science and Technology team. Jeff Whitaker is on the call here today, and he and I are very familiar with Ivy and the Science and Technology Fund. It's been a wonderful investment for a very long time. I had an opportunity to see this presentation in part a few months ago, and was very excited then to say, hey, we need our clients to see what's going on. I'll give you a little bit of Bradley's bio, and then we'll let him take it over from there. He joined Ivy Investments in 2003. Just a couple of years after I joined the firm as well. Was acquired by Macquarie in 2021, based in Kansas City. He's a senior portfolio manager for Macquarie Asset Management's Ivy and Science and Technology team, where he's responsible for making day-to-day investment decisions for the team's strategy. And I can't wait to hear about these day-to-day investment decisions that he's considering now. He joined Ivy Investments as an investment analyst, covering multiple areas of technology and healthcare, became an assistant portfolio manager for the firm in 2014 and portfolio manager in 2016. He's also a volunteer for the investment counselor and advisory committee member to the Texas McCombs Investment Advisors, LLC, a student-managed fund at the University of Texas at Austin. I'd be real curious to see what those students are interested in these days in this field. Earned his Bachelor's of Science in Business Administration from Trinity University and a Master's of Business Administration in Finance from the University of Texas at Austin. Holds the Chartered Financial Analyst designation, otherwise known as the CFA, that you can see on the screen, and that is a very difficult designation to get. It means he's really smart. And with that, Bradley, we're going to turn it over to you. Thank you for joining us on a holiday here today.
Absolutely, Pat. Thanks for the introduction. And I wouldn't believe everything you hear, but I really appreciate the time to spend with you guys. And I know you've been supporters of us for a long, long time. And I just want to say thank you for that. And we don't take that for granted, and really appreciate that. So hopefully we can have a good discussion today, just on kind of what's going on and a lot of things that obviously are pretty exciting. There's always exciting innovation going on, but I think right now is probably one of the most exciting I've seen in my career, and I think there's a lot more to come there. So without further ado, maybe I'll just just from overall perspective, I think what I'd do is I'll give you some thoughts, but I'd also love to get your questions, and those are always the ones that are top of mind. So don't be shy after we run through this presentation. I'd love to answer anything that's on your mind, wrapped around artificial intelligence or innovation or anything else for that matter. So anyway, maybe where I'll start is when we think about artificial intelligence. I know many of you, like me, have seen all kinds of different headlines. We hear it on the news every day. You see it in newspapers, magazines, all over the place about artificial intelligence, right? You hear, maybe you've heard GPT thrown around. You might have heard that companies are starting to adopt co-pilots and things like that. What I would say is that obviously, when you go into new technology, and we see it sort of with each cycle of innovation, you do get a lot of hype around new things that are going on. But what I think is important really to recognize is that artificial intelligence, the hype is real. And I think it's something that's real from not only the perspective of what's coming, and I think it's important to recognize too that it's very early on in this innovation cycle, and we're going to see a lot of new and different things coming. And when you say artificial intelligence, it doesn't just mean one thing. Sometimes it sounds like robots coming to take over the world or other things like that. But really, the best way I think to think about it when you see these headlines is to think about it as a productivity enhancer, and that's where we're going to start. And if anybody tells you they know where this is headed, they're not telling you the truth, because as we look at each different innovation cycle, things happen that none of us really anticipate. What I can tell you is we're reading the tea leaves on this. We're looking for the opportunities that pop up. And those are the things that we get really excited about, the things that we've invested in the past. And I'll walk you through some of the investments we have right now too. that sort of are reflective of where we're going. And I'll give you a little bit of a framework too on how we're thinking about investing in artificial intelligence and some of the things that are going to come on beyond that. So again, I would think of this as a process, a fast-moving process in terms of this technology proliferating across companies, across individuals. That, I mean, not long ago, you know, when you're typing on your phone, all of a sudden you started seeing autocomplete, right? Which is a lot of times annoying to me and may get it wrong. But that's sort of the early implications of artificial intelligence. So if you think about those types of small things where your phone or your computer or other things is anticipating what you're going to do next, and then obviously trying to save you some time. Then it goes to the point of GPT, which you may have heard that where we're maybe able to write documents or put things together for you, those types of things. So really that productivity enhancement is what I'd encourage you to think about. So then if we think about innovation, you know, I mentioned before, we've gone through a lot of different cycles. And what this chart really does is this shows you, you know, several of the different cycles that we've gone through really over the last 70 or 80 years, right? I mean, if you go back to the early 1950s, which is actually about the time that the Science and Technology Fund started, if you can believe that, going back that far. And obviously innovation looked a lot different. The investments looked a lot different, but we still were looking for innovation. One of the first couple funds that came out then. But at that time, you know, the mainframe was coming, and that was a novel thing. And then we sort of moved into this period of time where you had the PCs come. So if you think about, you know, call it client server. So really you didn't just have centralized computing, you actually had computing on your desktop, and desktops led to laptops, and we all know where that's gone. Then sort of we got into the period of time where, hey, you know, we can start connecting these things together. We got the internet, right? And so when you start to think about this innovation, it really is cumulative. And I think that's what, you know, as you look at this chart, think about this from a cumulative standpoint. So we got mainframe, we got PCs, then you connect them together. That brought you e-commerce, right? So internet. Then you started moving into this period of time where now you have devices that you can walk around with. That turned into handsets, right? If you think about phones, we had our flip phones, our Motorola flip phones. Now we've got smartphones, right? So that iteration continues. And then the reason why we can use those are things like the cloud, right? So the reason you can be connected to all these apps and all these things is because you connect through a network back into a data center. All of those things work together. Then once we built that infrastructure out, you start to think we're creating lots of data, and there's lots of intelligence that now is being connected. And we've talked about it for a number of years as sort of being this big data analytics engine that we started to see come to life. And what happened then is, okay, hey, now not only is that computer in your pocket able to do a number of different things, but now it's able to do a lot more useful things. The analytics, its relationships. You started to see some of the machine learning, if you will, which is sort of that predecessor to what is artificial intelligence. And then we got, you know, things around the edge, even our thermostats and our doorbells, all these things that became connected and they became smart, if you will, right? They recognize people or dogs or things, walk up to your door and it says, hey, there's a pet. You know, those are the types of things that we've gone through. And now we're kind of entering this period of time where cumulatively, you think back over those innovation cycles, you got artificial intelligence. Now you can take all this data, all this information you've had, all this computing power, and now you can take all that, figure out the relationships of all those, because ultimately what it's doing is figuring out, okay, what are the patterns, what are the relationships when you dump tons of data into a model, is what we call it, right? A large language model. So it recognizes text, pictures, all of those types of things. And then what you can do is try to make that predictive, right? And so those are the types of things that have happened. But what I think is also important and something we've talked about a lot and been invested heavily in over the years is semiconductor technology. If you really think back on each of these different periods of time, really it's that revolution within semiconductors that has enabled this over time. And so that's something that, again, will continue to be a real foundational part of how we invest over a period of time. But this is, I think, a good way to think about how we've gotten to where we are as we talk about artificial intelligence over the next several minutes. So then, if you think about this, I'm throwing at you all these terms on your screen: machine learning, inference, neural network, LLM, generative AI. You may hear all this noise coming at you within that. These are all different terms that you may hear thrown around when somebody talks about generative AI or artificial intelligence. And I would think, again, I would encourage you to just think about this collectively as different capabilities of a similar technology, right? Some of them are descriptive of the technology, some are actual uses of the technology, but just think of it holistically. You don't need to dig in and really understand each one of these terms. What you need to know is it's driving for productivity. There are going to be different applications of it. And the bottom line here is that it is going to move fast, but don't get confused and bogged down by some of the terminology, because again, I think it's going to be iterative. And I think if you get a chance to listen to Sam Altman talk, or Satya Nadella, who's the CEO of Microsoft, they'll talk about it also as an iterative technology, right? So the exciting part is that, hey, the first implication of artificial intelligence may help 8% of tasks out there be more efficient. The next iteration of these models may make it 10 or 11 or 12% more efficient and more capable at certain human tasks. So over time, this technology is going to evolve. And that's, again, how I would encourage you to think about it. So then when you think about it from the context and the way in which we look at how do we invest for the science and technology, and for you, our shareholders, and ourselves, is to think about a framework wrapped around artificial intelligence. And the framework right now is one that I think, can kind of be broken down into sort of, call it, 3 phases. And I think the first one, the one you're seeing right now that's driven a lot of the stock prices and a number of different companies, again, goes back to that base semiconductor technology. So that infrastructure build out. So we're building the technology, the plumbing of what we need to do all of this analytics and all the work on top of that. So the software and the application. So right now we're building the data centers with things like what you'll hear called GPUs or processors. So the ability to do that, you'll have the memory there, all of those core building blocks that you have to build technology. So think about it as your computer on your desktop, the way that you're able to run your mail application or to surf the web, all of those things. You got to have a processor, you got to have screen, you got to have all these components. We're really building that plumbing and that capability that then we can innovate on top of. The next phase that you really see, and some of this is happening already now, is really product enhancement. So you'll start to see companies add AI feature sets into it. You may have heard of Microsoft launching what's called a co-pilot. So it'll have a little, basically an assistant next to you that says, hey, I want to build a spreadsheet of my monthly budget. And it will say, okay. And then it will go and create that for you within Excel or a Word document or things like that. So you're going to start to see some of those things that aren't immediately obvious. But I think going forward, you will start to see those. Do you have a question? Okay, I'll just continue. So those are the things that I think you're going to see as we think about how do we invest. And I'll talk about that on the next slide, just in terms of some of the names and things that you see there. And then the next iteration of this, if you think back of some of the biggest companies out there now, a lot of them we didn't even know the names of before that innovation cycle started. And I think that's what you should expect to see coming up. Obviously, we have some very large technology companies that are extremely innovative, that are going to continue to be those incumbents. But we're going to have some new companies come in that are doing new and different things because they're not tied to some of these past innovative revolutions. And I think that's where we're really looking. And I think as a specialized fund, we really spend a lot of our time talking to academic institutions. We meet with people from agencies like DARPA a lot of different types of inputs, so we can understand, even from private companies, what is really going on innovation-wise, what can be disruptive to what we own now, and what's coming down. Because again, part of this whole innovation, destruction, and creation process is to make sure not only we're finding those new things that are going to drive economic value in stock prices, but also avoiding the ones that are going to get hurt and damaged in the process. And I think that's an important part of our process. So that's sort of, as we think about the framework, this slide gives you a little bit more breakdown of what I just kind of walked through, and a handful of names, some of which you'll probably be familiar with. But there's that infrastructure, again, at the heart of it is providing those tools that are really necessary for AI growth. Semiconductors, these are the first companies. These are just a few examples of the companies that we own in the portfolio currently that obviously play into this from a chip perspective, from providing the cloud platform, from a number of different ways. Then the product enhancement, again, improving and building on top of that infrastructure. A company like Intuit, all of us are going to be doing our taxes. So if you think about TurboTax, you're going to see more AI feature sets added alongside as you do your taxes. That's going to be a more interactive type of process rather than just going into it. It's going to really walk you through almost as if you have a guide in that process. And it's been fairly elementary at this point, but it's going to get pretty good over the next several years. So those are the types of things that, as we think about opportunities for companies to have greater economics or to take more market share, those are the things that we're really watching for. And obviously there is a labor component to this, right? Everybody says, well, is AI going to take all the jobs? Well, what we've really seen early on is there's always, when you get to these things, people thought, okay, PCs were going to take away all the work that people were doing. It just changes. And I think that's, again, another way I'd encourage you to think about this iterative process. There are certain areas that need to be automated, right? That can really take away what are jobs that people don't really enjoy. And then let's figure out new ways of doing things. And that's sort of the nature of human evolution, but also that innovation cycle that happens. And then again, from a new product standpoint, lots of exciting things going on there. We don't know where those will land, but that's sort of the next step. That's a few more years out. So with that, maybe I'll stop and I'll see. I would love to take any questions. Anything that you guys are hearing out there that's interesting to you. And happy to talk about the fund or anything else too. So I'll stop there and hand it back over to you, Pat, if you want to facilitate that.
Thanks, Brad. I appreciate that. You can ask your questions a couple of ways. If you want to unmute and ask one, we can probably get that done. We may step on each other just a little bit, but we'll work that out. Also, the chat feature. And I think I'll ask one just in general for now for you, Brad, while people are figuring out how to get unmuted and ask that question if they want to. And I'm just kind of, what an exciting time for you to be. We think about this as our job with our clients is, sometimes let's just park money in the way of a big trend. And my goodness, is there a bigger trend? And it must be exciting for you to come to work every day to try to see how this goes. But I wanted to ask you if there's any idea about the pace of new companies or that you have to look at now, or that you get to look at now as you're talking to these educational institutions and others, how's that going for you in terms of looking under rocks and finding exciting companies to kind of keep an eye on, and any that you may have added recently, if you can talk about that and maybe why or why you have a big level of conviction about some of the bigger holdings that you have right now.
Great. Yeah, no, fantastic question. I think, as we think about the new and exciting things, I'll use an example that I think is a great telling one. I go to the Consumer Electronics Show every year because it gives me an opportunity to see some of the new innovations that are coming, the trends that are going on there. And I was there in early January, and so got a chance to visit with a lot of different companies, and companies like Deere and Caterpillar and others are showing up there because they are very innovative companies. And at the heart of that, talking to those large companies can be very insightful into where they're putting their R&D. So right now, we've been spending a fair amount of time not only with those incumbent companies, I mentioned trying to look for what's the new thing, but private companies. I attended a conference hosted on the West Coast, near the Valley, where there are a lot of these private companies, right? Some of which are just really starting to raise money, but they've got new and different ideas. And what that does for us, while we invest in public equities, names of companies that and it's, we've got about 40 names in the portfolio, so we know our companies extremely well, but understanding and knowing the right questions to ask those companies to really know where they're going, where the economics of their business models are going, that's something that we really work hard to do. And so I think the question's a great one because I do think that it forces us to continue, and we've been doing this for a long time, but it does raise the excitement level because the speed with which things are changing is a lot faster. And it's just like the other day, Google announces something and the next day Facebook announces something or whatever else where you can take text and create images. And so you're just seeing some of these really just mind-blowing things of capabilities because people are figuring out how to use different things. Now, taking that and then figuring out the financial model, because at the same time, I think it's important to recognize that we're investing in stocks, not just companies. And I think part of what we've always done is to balance that excitement. Just because something is innovative doesn't mean it's a great investment. And I think that's where you've got to make sure that in the context of a financial model, you've got great innovation, right? But you also have a sound fundamental business model, and you have a valuation that makes sense, that's opportunistic from our perspective. And then it's a matter of weighting our weightings within the portfolio reflective of that conviction. And I think that whole process is something that even in times of innovation, and we know, there are funds out there that really don't care at all about valuation. They say, okay, that's a cool thing, I'm going to buy it. That's not what we do. And I think that's led to, over a long period of time, a very attractive risk-adjusted return, both within the technology. And I just remind you, too, that this technology also is going to have a huge impact on the science component, right? So one of the real unique features is while we've invested in innovation over a long period of time, we invest in really kind of those pure technology companies, but we have a portion of the portfolio that oftentimes is levered to healthcare. We all know healthcare needs a lot of innovation and a lot of an improvement. And you start to think about the ability to take massive amounts of information and data that's out there sitting at hospitals and different places and national institutes of health, and collecting all that information to free up one of our tightest resources, which is the doctor or the specialist. You think about trying to get those appointments. Sometimes with specialists, it may take months to get in to see them. The answers to those questions are available now, and they can be really delivered to us. And we're going to see, I think there's going to be a massive change within that part. I didn't mention that earlier, but that's one that we've also spent a fair amount of time on recently. And there's a limited number and ways to play that currently, but that's an area that's really ripe for disruption. In terms of names in the portfolio, I think, we have various ones that may not be, immediately apparent to everyone or that would understand the names, but, the NVIDIAs and the AMDs are building the foundation. Broadcom, which you saw on the page earlier, is one that does custom silicon, and a name that we've known and owned for quite some time, that really, plays into how companies are going about developing these solutions. So again, that's first box of the framework by which we invest. And you think about names like a TSMC, right? Which is if for those that don't know, TSMC is basically manufactures half of the chips in the world. We wouldn't have an iPhone or anything else if TSMC really didn't exist. And so that's one that, again, is sort of the arms dealer to this race that we're in, going on within AI. And I think as we look through this year, we're looking at this and saying, okay, is any of this getting over its skis? Because I think that's the danger when you get into these things. how fast you look at some of these stock charts and you say, holy cow, right? And how much things have moved. And I think that's where we're being very careful and disciplined too on that, but also understanding we're looking out 5 years and saying, what is the opportunity for this particular stock or this particular market? And during these times, all I know is that our forecasts are going to be wrong. I don't know which way they're wrong, but when we get those forecasts again in this type of innovative time, most of the time we're way too low with our expectations. We underestimate the change. If you look back at what the anticipated numbers of smartphones were, or things like that, there's a lot of examples where we were 40 or 50% too low, even with the most aggressive expectations, just because of the power. Once a cycle gets going, the adoption really picks up. So maybe that's a little long-winded answer to your question, but I think we absolutely are. This is exciting times for us, and so it's the time, it's that opportunity when you go through these periods of time where you really get a chance to outperform, and those are exciting things. I mean, last year was a fairly narrow market, right? You had the mega 7 or whatever you want to call them, but now you're starting to see it widen out, and especially kind of year to date, you're seeing more of these other companies come in, and we're going to own some of those big names that we think are incredibly innovative. But we're also, the uniqueness by which we do what we do is really, we're looking at those smaller and those mid-cap companies too that can be very innovative and drive really high levels of return. And it's unique from, as we think about other products that are out there.
Okay, anyone else? Thank you for that, Brad. Anyone else have a question?
I see Laurette's got her hand raised.
Yeah, let me
Need to unmute your mic.
Got it.
There you go.
Okay. Got it. Okay. I was a bit of a victim of the .com bubble. So part of the .com bubble was the jobs. And my question is, the economy relies on the workers. So I'm concerned about the labor market, because everyone in the Wall Street is always looking at the jobs added, the jobs lost, etc. And that really affects Wall Street extremely, just as much as the Feds and their inflation rate adjustments. So I'm concerned about the labor market. Many people are losing jobs in the tech companies, and what effect that's going to have on all of these tech funds, which I am heavily invested in. I'm also concerned about robotics taking jobs away from blue-collar sector and even higher. So how will AI help the labor market? That is my question, plus all the other questions embedded in that question.
Yes, that's great. I got so many different ways I can go with. So from a labor perspective, what I can tell you is that there are going to be jobs that are impacted, and I think that's something that, as we think about things like, even if you drive through your local McDonald's or someplace else, you may have an AI voice say, "How can I help you?" Right? And it's pretty amazing. It gets it right most of the time, right? And so those are the types of things that say, when the labor is hard to find, there's certain ways you can solve it with technology. You think about that, and I take that to the next level, and even at the Consumer Electronics Show, I've seen these for a long time, right? Where a kitchen is entirely robotic, right? So if you have something that you can repeat and there's a consistency of it, those are things that are ripe for automation, right? It's going to take a long time because the quality has to be there, all of those things. But then you think about, on the back end of that, there have to be people supporting that, right? So what happens is you actually move up the value stream for people because you do get more technical capabilities. Now, that over time has to change within the economy, right? So if you think back a long time ago, right, if we're back to horse and buggies and things like that, you know, you had people that fed horses, you had all these other things. I mean, we really evolved our economy over time. Now, given the speed with which technology changes now, there might be a little bit more disruption in that. But what I would say is that those things are going to change, I think, and evolve over time. So just like any other time in history, I think you will see some disruption in the job markets, but it's going to be certain different parts. And what's going to happen is it's going to create opportunities in other places, right? And I think we have, you know, there are a lot of real fundamental questions we can ask from a society standpoint, whether it's income inequality, you know, all these other things that we could debate and talk about. How do you solve different things? And technology is one that enables, you know, a number of different things like that. And there are various, you know, different solutions. There's no silver bullet for it. But I strongly believe, having, you know, again, lived through those times, like you said, in the .com and other things. Now, the good news from the stock market perspective is that in the .com, nobody cared about valuation anywhere. It was sort of the Wild West. Now in this market, while you know, we've had a good market last year, you know, we had a tough market a couple of years ago. Last year was a good year. This year's off to a pretty good start. I do think that where we look at valuations and we look at expectations, they're reasonable. And those are things that I think are really important as an investor to keep your eye on. And again, back to your point on labor, though, I think it's a great point. I don't think any of us know exactly how it's going to look, but my confidence comes from being a student of history and seeing the evolution and the adaptation of people over time. And it's just like, you know, when we had that disruption when we were going over labor arbitrage, right? A lot of the things that, you know, from an economic standpoint, you say, you know what, free trade, all this stuff is great, but you ship all these jobs overseas and you arbitrage the cost of labor in China or in India or whatever else. That was very disruptive to us at home, very disruptive. And I think there are a lot of communities that struggled because of that. But at the same time, there was some overall, we adapted to that, because if you look at the labor, you know, unemployment rates and other things like that, outside of, you know, the disruption of COVID and some of these things that were unnatural, we really sort of found ways around that. It was very good for the consumer. So there's always these ups and downs that happen. But I do think that that's something that is particularly important to think about. But I have high confidence that we watch it. You know, we have our internal economist who spends a lot of time on the labor markets and the pluses and minuses. When you see the jobs come out, you know, where are they plussing and minusing and that. And then on the robotics thing, I think robotics is one that is one of the most fascinating. I spent, you know, this has probably been a couple of years ago. I was at the Olin School of Engineering, which is outside of Boston. And it's one of the best engineering schools in the country, if not in the world, and very specialized in robotics. And we were talking to not only that professor, but then we had a chance to spend some time at MIT and in their robotics lab. And some of the things that we're trying to solve, right, was one of the hardest things from a robot. And again, this is maybe a little tangential, but is being able to turn a doorknob, right? One guy had been studying for 30 years how to have a robot turn a doorknob, and they couldn't figure that out. And that's how hard it is to sort of progress these things. But you're starting to see those types of things solved and creative things. So anyway, so thanks for the question. Hopefully that gives you a little bit of an answer to what you were after.
Well, yeah, I enjoyed your perspective, and as you say, you pulled history into that. So you must have a background in history, maybe a minor or something in college.
I have a sickness of reading, and so I love to, you know, history doesn't repeat, but it rhymes, and I think it's a very good teacher of us in terms of things that do tend to repeat, especially within technology trends and how human behavior is. Human behavior is one and we see it in the markets all the time, that also creates opportunity. And so those are the types of things that we do enjoy looking at and debating heavily.
Well, thank you very much. I enjoyed that
Absolutely. You're welcome.
analysis.
Brad, we have a chatted in question. I don't know if you can see that or you want me to read that for
I
you.
don't have it up. If you want to just read it, Pat, that would be great.
It says, with the use of AI, there is tremendous upside in predicting outcomes as it relates to financial planning. Everyone, though, can't just pick the winners, which leads to the volatility of other investments. Will AI tell us when to hit the brakes as well? We will still have our ups and downs, but hopefully, let me finish that. Navigation will be easier through those downturns. That
Yeah.
sounds like a financial planning question. We'll hear what you have to say about that. Maybe we'll have a comment or two as well.
Yeah, no, I'd love to hear your perspective too. What I would say is that, and I finished it up with to Laurette's question too, is like, if you think about a lot of the behavioral aspects of the markets is really what gets investors and others in trouble. And I think that's something, as we look at it as portfolio managers too, there's a behavioral, there's an emotional aspect to that. And we're very aware of it. And we built in our process a way to process that, right? So, we're not always right. We want to bat, it's just like, in the major leagues, if you hit over 300, you're pretty darn good, and so we want to bat a lot better than that. But, we're going to be wrong. But then making sure that we assess situations and we make good decisions based on fundamental thinking that's not driven by emotion and other things like that, because that's where, at market bottoms, right? How many people really wanted to sell out of the markets, when we went through 08, 09, and that when you're feeling the worst, in a lot of cases is the time to be getting involved. So I think with AI brings more tools that probably help us analyze those types of things, right? Where are we? We always, is the market overbought or oversold or these things? I mean, there's other things that can be inputs as we look collectively at the market. But I think in a lot of cases, it's going to bring more tools and more inputs, sort of like, I talked about having this plumbing and more analytics and all that stuff. As soon as you think you've got the model figured out, right, it changes. I mean, there are a lot of funds and others that no longer exist because they fundamentally built a model based on assumptions that then became wrong and got themselves into trouble from a financial perspective on how those things were run. So I do think that AI will bring another layer of analysis and help within the markets, but that human aspect of analytical work built on top of that is likely to be the most powerful. And again, we are our worst enemies. And regardless of whether your AI, co-pilot tells you to do this or that or whatever else, I think fundamentally that aspect of it is the hardest part. And I think that's something from a financial advising, from a portfolio management standpoint, the best people out there are the ones that can really separate that and find a way to do it. So I do think it's going to be a great tool set that's additive to what we do and to what your advisors do on a daily basis. And that's exciting to me because, again, that can find ways to optimize risk, to do other things like that, and further integrate planning opportunities. But at the same time, I do think that human component, kind of to the question and my answer about in the drive-through, right? You need someone with really being able to have that view overall of what's going on. And so I don't think we're going to automate all of the financial jobs out of existence, but I do think that they will evolve like we've always done over time.
Yeah, thank you. There was another additional comment on there that, AI will take the emotion out of it. And I think that from a financial advisor standpoint, the speed in which we can help see through analysis and things that are going on, the speed in with which we can be communicating with our clients is going to get a lot faster and it's going to get better. And so I personally can't wait to see what is coming our way in order to do a more efficient job. I think one of the first things you said in this was it is a productivity enhancer. And for us, we are hunting that productivity all the time, and it is to the benefit of our clients for sure. Um, we're always going to be emotional human beings, though, no matter what data we're seeing. The emotional side is going to be there, um, and I think we'll always have that to deal with. And we'll see. It's an exciting time. I can tell you, as excited as I am for you, Brad, and what you get to do on a daily basis, I'm equally as excited for what we have coming for us and the help that we're going to get in order to do a better job for our clients there. And hopefully that answered your question. Do we have any others? Mr. Whitaker has a question.
All right, Jeff.
Actually, a comment, a comment to Mr. Smith's question. You know, investors are always looking for the El Dorado of investing, the perfect formula to know precisely when to sell and precisely when to buy back in, and that's going to solve all of the problems of volatility. And I don't know that I see that happening quite that way, because so much of the volatility of the markets comes from what some economists refer to as black swan events. Usually swans are supposed to come out white, but sometimes they come out black, and that's very unusual. And a lot of the volatility of the market comes from that. More recently, I don't know that AI would have predicted COVID and what happened there. Or I don't know that AI would have predicted the Kennedy assassination, or Eisenhower's heart attack, or President Reagan getting shot. And all of those things led to a lot of volatility in the short term. And investors would do well to take a little more of a long-term approach, look at things where they might be in 5 or 10 years, rather than trying to predict what the short-term aspects are. That usually does not work out for most people, and I don't know that AI would necessarily change that. It might be useful in identifying companies that fit within certain trends or certain screens that a person might be looking for. Brad, I have a question for you. Thank you for being here, by the way. We really appreciate the time and what you do. It seems like a lot of the research and development and progress in AI seems to be happening with US-based companies. Is there much going on overseas in this area?
Absolutely. There is an enormous amount going on overseas as well. If we look at, you know, the things that are happening, and I think that's the sort of the arms race, and you've actually seen our government react very strongly to that. So whether or not folks on here are aware of some of the restrictions that have been put on semi-cap equipment names being able to export into China. You know, a lot of this kind of goes back to, you know, intellectual property and other pieces like that and recognition, but it's also being, you know, the utilization of some of the chips. You know, even NVIDIA was not allowed to export certain chips that to China that potentially could end up in government entities. And they're running extremely fast, and they've got different views. And so I bring up China kind of as the main focus if we think about overseas. But what AI can do from a cryptographic standpoint, whether it's, you know, again, we're all familiar with cyber breaches and different things like that. There's a lot of different, you know, negative things that AI can be utilized for, you know, infiltrating national security systems or things like that. And so you're seeing that, and those are signaling mechanisms that tell you about the race that's happening within AI, not only in the private sector that we talked mostly today, but also in the public sector, wrapped around governments and what they're doing. So absolutely keep your eye on what's going on. China, Europe really in a lot of ways is partnered, but I think a lot of the innovation still, because our semiconductor industry really it was born and grew out of the US, that we really have a lot of the best and brightest from all over the world working here and still want to come and work here on those innovative platforms. And as long as we continue to do that, I think we're in a great spot. But it's absolutely something that is a global, because you talk about impacting an economy or whatever else within that. If you're behind on it, that's a big, that could become a big problem quickly, which will be disruptive to economies and people and social stability and all that. So this is the heart of this whole thing that we talk about in terms of, that can have ancillary impacts. I mean, you think about too, I talked about TSMC and a stock that we own. I mean, we follow the politics around, I spent a lot of time reading about the politics of Taiwan and China and other things like that, because a big part of TSMC is based in Taiwan. And the big part of why the US is so focused on defending Taiwan is that company, TSMC, because 50% of the chips in the world, if something happened in Taiwan and TSMC was shut down, you talk about bringing the global economy kind of to a halt. That is really the value and of what's happening in the world from a development standpoint. NVIDIA, almost every NVIDIA chip is manufactured in Taiwan. And so you think about these types of things going on. There's a great book out there called Chip Wars. If you want a historical view on how the semiconductor industry developed in the US and how it ended up having a big piece in Taiwan and some other things. A great book that really gives you some context for the politics behind that, and also will help you understand, as we went through COVID, all the semiconductor shortages, right? Some autos couldn't leave the showroom floor because they didn't have the last chip in them or whatever else. It's a very complex and complicated supply chain. But the other part of this is, we talk about bringing our supply chain back to the United States. What I can tell you is that ship sailed. There are so many steps, and I was the semiconductor analyst for quite some time as well. That ship has sailed, and so we are so reliant on all these other parts and steps in the process that it's a very complex world out there, and I don't think it's good for anybody to have conflict that will impact this, because it will really shake the foundation of economies. And I think obviously all the big countries know that, and they're playing a game of real chicken at the top, but they understand the implications further down. So those are all sort of the things that I think about when you ask globally about the adoption of AI and the race for AI. Those are the things that I think are particularly important to think about right now.
I have another follow-up on that, unless does anyone else have a question that they would like to ask? So while people are thinking about that, we are getting close to the hour, but we still have a few minutes. And back on this Taiwan semiconductor question, there's the CHIPS Act in the United States, and I keep reading that Taiwan Semiconductor is going to be building big chip manufacturing plants here in the U.S. and other parts of the world. How much of that is, and how long is that going to take to be real? Meaning, we're significantly, meaningfully less reliant on what Taiwan Semiconductor does in Taiwan. How long is that tail?
Decades. Probably, if I look at what, when we talk about what the CHIPS Act is doing, and I actually met with the guy that's sort of the core of helping make those decisions a couple months ago. So, sat down with him. I'd known him from, past years, and really they're trying to motivate some change. And what's important to say, people say, wow, that's a lot of money to start giving to people. But what's really interesting to think about from a CHIPS Act perspective and what we're doing is that if you give $1 billion to a global foundry or to an Intel or to a TSMC to build outside of Phoenix, what you're doing is you're giving them $1 billion, but it may cost them $15 billion to build that plant. The real problem in a lot of this construction is the commodities, it's the labor, all that, because there's only so much talent around that understands how to work and build a leading edge semiconductor manufacturing facility. And a lot of those are based in Taiwan. That's why they're so efficient there, is because it's all in one place and all the expertise is there. Same with Intel, focused in Oregon and in outside of Phoenix. So there's a limit of talent that you can do, but then also it may cost you $2 billion before you even put any equipment in these fabs to build the cooling, all of the power, the concrete. You know, there's this Ohio project that's going on where it's basically sucking up every bit of concrete within, you know, multiple counties around. So there's those types of logistical issues that it sounds like a great idea, but what happens then is, so you make chips, right? They come in wafers. So then you in these fabs, you'll build basically a 12-inch wafer that has lots of chips on it. Then you'll cut that. What happens is that wafer's made there, but then it may be made in the US, but then it's shipped over to Asia to be cut up, to be tested, to be packaged, and then to be sent back to wherever it's going ultimately. So we don't have the capability here to test, package, do all these other things at all. So it'd be great to be able to make the wafers, but you can't do anything with those chips without the rest of the process that's been built everywhere else in Malaysia and other places. So it's a great idea, but really the practicality of it is it's a very, very first baby step in being able to create a self-sustaining supply chain. Now, there's certain technologies, right? If you go into military or other things where the chips are made here, packaged here, don't ever leave the US, very specialized technologies. But when we're talking leading edge CPUs, GPUs, some of the stuff that we read about that's driving AI, those cannot be done only in the United States. And that's the part that, again, it's very early in that. It's a multi-decade type of project to create a standalone system for semiconductor manufacturing. It's a global business now, and it's so complicated. The ship has sailed, in my opinion. And again, it can be done with the right amount of money but it's not efficient capital that's being spent. I do think the government actually is doing exactly the right thing. They have some very sharp people in there that are creating carrots. And so in a use of, as a taxpayer, what they're doing in terms of driving motivation with offering $1 billion here or $1 billion there sounds like, throwing $1 billion here, whatever else. There are very specific milestones, and it requires those companies to commit they're basically given 10 or 15% sometimes of these projects, and the company still has to commit 90% to it. So there are things that I think they're doing this in a very, very smart way. I just think it's the very tip of the iceberg in terms of being able to really change the dynamics. But if you're playing the long game and this is how you want to sort of create the opportunity, it is about the only way you can make it happen.
Well, thank you for that, Brad. I think that section right there was worth showing up for, and I think that was a perfect demonstration of why, from an investment standpoint, we need specialists like you working on behalf of our clients to understand these types of things and to make those kind of investment decisions as to where to allocate our clients' money. Thank you very much once again for being here. We'll leave one more opportunity for questions, I think, before we let you go. Okay, I think we are good to go. We'll see if we can stop the recording. Or you may have that on your side, Brad.
I'll stop the share and
let me see if we can get that right. Stop recording.